Okay, let's get started on problem 7.1. Problem 7.1a. First thing we've got here is a bunch of sales that we need to post in the sales journal. So if you look at the instructions though, first it asks us to open the general ledger account and enter the balance of accounts receivable. So before we put in all these sales in the sales journal, we need to go down here and figure out the accounts receivable. And that's $34,500. And we're going to post that into 7.1a, accounts receivable, July 1st balance, $34,500. That's what you want to do first. Just right here. What's the first thing you want to do? It's going to be on the second tab of the 7.1a, not the first. Okay, so that gets a debit balance because accounts receivable is an asset and assets are debits. You could just put that straight into the balance. Okay, then let's look at the problem. In this case, let's read it out loud. Sold a dishwasher to John Martinez, issued sales slip 501 for $925 plus a sales tax of $74. All right, so we're not going to deal with anything right now except just posting. So what we're going to do actually is this. You'll put in the date, John Martinez. You'll put in, you don't know the total of accounts receivable yet. You do know the sales tax and you do know your sales credit. Once you add those two together, you have the debit. So look at this. It's debit, credit, credit. So it's debits have to equal credits. So you're going to put your two credits in and that should equal the debit. So we have a sales tax payable of $74. We have the sales of $925 right up here. And then we have the total, which will be $999. And over here, we have the sales slip number 501. Next one, July 6th, sold a washer to Helen Ty, issued sales slip 502 for $1,875 plus sales tax of $150. Again, you're just entering the sales tax, the sales, $1,875, and the total, and the sales slip number. So we can go on and on and on. It's going to all look exactly the same. So I'm just going to show you the sales journal, leave it up for just a moment, and then we'll move on to what we do with these totals. Actually, what you could do is you could pause this video right here and then copy down all this information. So probably I'll let you do that, and I'm going to move on. Once the sales journal is finished and all posted like this, what we need to post now is the totals. So you'll see the totals down here is what we need to post. So this is what we're going to post in the ledger. We're going to post the $11,907. I'm going to go to the next page. I believe it's down. Sorry. I'm going to go post the $11,907 right here and the accounts receivable general ledger as its debit. The S8 is the sales journal, page 8. And it's the last day of the month of July because remember I said earlier in the previous lecture, you just want to post the summary at the end of the month into accounts receivable. And that's all we did. So take a look at this. It comes from sales journal, page 8. 11,907, and if I go back here, there's the 11,907 right here. I'm going to do the same thing for sales tax payable, which is 882. I'm going to go back to the ledger, sales tax payable, credit 882. All payables are credits. That's when you take them out of payable that you debit them. And then you're going to do the same thing for the total sales, $11,025. Notice in the ledger they are $11,025 credit. I'll leave that up there for a second, but you can always pause the video right here and copy all that down. And they asked one more question of this problem. Let me go back to it. It says, what percentage of credit sales was for entertainment items? That's where you have to go to your total sales and figure out a home entertainment system. Okay, we have home entertainment, electric range, trash compactor, electric dryer, washer, dishwasher. So I only see one. So let's figure out what they did here. They said 3,350, and they divided it by our total sales, which gave us 30.4%. So where does the 3,350 come from? Let's go back to the entertainment center and see what it was. Okay, we have the $17.25 plus sales tax. There must be another entertainment item that I'm missing. The high-def TV. So they used those two items and they added them both together and multiplied it by, or divided it by the total sales to get the sales percentage. Okay, let's look at 7.2. You can always stop the video, go back and fill in those appropriate answers. 7.2, another thing, another sales journal, posting everything into the sales journal. First thing you do again, open the general ledger accounts. I believe they gave us the amount. And that's the accounts receivable, $16,636. So if I go to 7.2a, I am going to go to, actually the second page of it. I'm going to go to the accounts receivable. And I'm going to throw in, see, we open the general ledger accounts, record the transactions, post the entries. Okay, general ledger account, $16,636 debit. There it is. Balance, $16,636. So that's the first thing you want to do because you want the previous balance from the previous month. The beginning of the month, February 1st. So put that in before you go back to 7.2 and enter the sales journal information. But when you do enter the sales journal information, it's going to look like this. Just like the previous one. Again, we're going to be posting the totals of 40,000 and this amount to the general ledger. And instead of going through each one of those situations, you can pause the screen and copy. But I do want to get to the general journal because I do want to show you a couple things that are new. So I'm going to go back and look at the problem. Okay. It says post the entries from the general journal to the general ledger, total proof, post the column totals from the sales journal, prepare the heading of the revenue. Okay. Okay. So what they're asking us to do this problem in the general journal, Jekyll and Moore. Okay. So this is where somebody returned something, February 11th. It's got to be in this problem somewhere, February 11th. Somebody returned something. Yeah. Accepted a return. Okay. Anytime we see something like this, we know that all sales and sales allowances and sales returns go into the general journal. So that's why we have this February 11th one. So this is the information that we need to post. Okay. We accepted a return from Jekyll and Moore, originally sold on February 5th. Credit memo for 1026 includes sales tax of 76. So that means we go to, just like before, we're going to go to the general journal. General journal is the journal that you put the sales allowance and returns in, which is what we have here. It's always going to be a debit balance. We don't know what that is yet because we have to figure out, take the total sale and subtract this tax to know what the sales return is. So you can go ahead and put in the total first and then put in the sales tax payable. But this is what I want to explain. Why do we have this line here and two things? Well, we always put the account number of the ledger that gets affected. So for example, we're going to pull up the sales return and allowances, account 451, and put in the 950. That should probably be on the next page where all the other ledger pages are. Let's see. Yep, put in the 950. And then you've got it under account 451, and you've got the date, and you've got the page of the journal. But the check mark means that it also gets posted in an accounts receivable subsidiary ledger, which means not only is it posted in accounts receivable, which is account 1111 or 111, it's also posted in Jacqueline Moore's account, who is part of a subsidiary ledger of accounts receivable. So it's like there's two accounts receivables. You could think of it that way. There's the main accounts receivable with the summary of everything, and then each customer has their own individual subsidiary ledger, and so it's been posted both places. And there, under account 101, and the check mark means it goes under Jacqueline Moore, which means there's got to be a subsidiary ledger here. And they actually don't have it up for you as an example. But if they had one open, there'd be one with her name, and that check mark means it was posted under her name. That's all this line means, and it just means it was posted to two different journals, two different places. We do have one more return on the 25th, on February 25th. So let's go back up to February 25th. Gave Ann Brown an allowance for scratches on her bookcases. Okay, so she gets a discount. Any sales discounts and allowances go in the general journal. It's the same thing over again, just different amounts. So we have a sales tax of $52 and a credit memo of $702. So we go back to the general journal. $52 sales tax payable, $702, and accounts receivable money back. That means the sales itself was $650. You'll put the appropriate account numbers along each side, and that's all there is to this problem so far. Now you actually have to post these things into the ledger, so that's what the next page is about. You'll be taking the $950 and moving it over. You'll be taking the sales tax payable for $76 and going to the sales tax payable here, putting the $76 in, taking it from journal page 24, and here they have journal page 24. That's where all those numbers come from. So I'll leave this up for 1 second. You can pause it. In the meantime, let's move on. This is what your amount should look like when you're done. That's going to be your accounts receivable balance. This is going to be your sales tax payable. And we did two things in the we did this sales return and allowance. We did that sales return allowance. So where does the $29.65 come from? That means it comes from up here. Sales tax payable credit, $29.65.20. That's where that came from. Then we had the sales tax payable here, $76. Sales tax payable here, $52. So there should be 3. 1, 2, 3. That's good. Sales. The sales came directly from here. Sales, $37,065. Sales, $37,065. Sales return and allowances came from the general journal. The previous page, $950 and $650. Come to the journal, $950 and $650. You can pause this and fill those in on your own time. Let's move on. Okay, let's see, what's the problem? Another sales journal and another, it's the exact same thing over again. since we're doing the same problem for the third time in a row, here's what we should do. It's a matter of saving time. Okay. Actually, first, they wanted us to do a partial income statement. Let's cover that. We have our total sales. We want to know our net revenue or fees income. This time it's not a fee. This time it's actual merchandise. That's why we call it sales. That comes 37,065 comes from up here, 37,065. Less sales return on allowances, 1,600. Where does the 1,600 come from? From here, sales return and allowances, $1,600 balance. So we take our sales, everything that was returned, and subtract it, and that's our net sales. That's how simple it is. It's a quick, simple income statement. That's all that is. Okay. Next problem is doing a sales journal all over again for the third time. So if you're going to fill this table in, you could pause it here and fill that in. You'll have, again, returns. I'm going to let you guys try to figure this one out. But pause it if you want to check it out. Try it by yourself. Pause it, check out the answers, and make sure that they're correct. And then 7.3a, there's your ledger. Sales tax payable, sales, sales return and allowances, and accounts receivable subsidiary. This is where it gets individual by name. That's where the check mark comes in along in the general journal. That's where, back here, this check mark means it was posted not only to account number 111 because it's account receivable, but it was posted to a subsidiary ledger, and that's a really good example right here. That is a subsidiary ledger. The person's name. That's where the check mark comes into play. And this is the whole subsidiary ledger. Every one of the customers that we dealt with, their sales slip, the sales journal page, what they purchased. Some of them have a credit memo. If it has a credit memo, that means it went into the general journal. That's what the J is. Some are just sales journals, and some also have the sale allowances that always go into the general journal. You can take a look at these balances as well. Pause it, make sure you have those correct as well. Let's see if there's anything new in this chapter that we did not do. We've done a sales journal. There's a schedule of accounts receivable. That's just listing everything that was purchased. Same thing, general journal entries, general ledger entries. So this is 7.4. If you want to stop and look at that. Accounts receivable, sales, sales return and allowances, Applegate Nursery. These are suppliers. And I'm going to slow it down just a minute, but I'm wondering if there's anything new that we didn't cover yet. Another sales journal. Oh, that's 7.1b. So we've done, that's all of 7.1a. Take your time, go through, try it yourself, pause this video, see if your balances match. You'll find the worksheet on Blackboard. And please email me with questions or anything. This is really going to be a challenge, but I hope all goes well. So, bye for now.